Folks, if you thought congressional trades were big in the past, brace yourselves, because 2025 is shaping up to be the best year ever for congressional riches. We're already seeing aggressive moves in Congress members' stock portfolios, with trading volumes hitting levels we've never seen before. And guess what? Some of these trades are happening in industries that could define the future, like renewable energy, tech, and biotech. This brings us to an important question. Why do Congress members invest in tech stocks so heavily? It's because tech companies often stand at the intersection of innovation and government policies, making them prime targets for informed investments. Now, why should we care about what Congress is buying? Because these aren't random picks. They're strategic moves based on insider knowledge and policy influence. By following Congress members' stock portfolios, you can gain insights into stocks influenced by government policies before the rest of the market catches on. Congress members have access to closed-door meetings, committees, and regulatory discussions that can make or break entire industries. By tracking congressional trading patterns in 2025, you can potentially get ahead of the market before major events unfold. Let me give you a quick example. Last year, a congressman bought shares in a biotech company just days before it received FDA approval for a new drug. The stock skyrocketed by 50% overnight. Did he know something about the regulatory process? Maybe. But what's clear is that Congress often invests where they have an informational edge. This is why monitoring insider trading by Congress is crucial. Whether it's biotech, renewable energy, or even SPAC stocks for long-term growth, Congress tends to invest in sectors that are on the brink of significant change. Why Congress buys these stocks? Many of these congressional trades aren't just about making a quick profit. They're about long-term strategic positioning. For example, when Congress members invest in renewable energy companies, it's often because they know about upcoming legislation or government policies like tax incentives that could boost the sector. Similarly, when they buy tech stocks, they're likely aware of potential government contracts or policy changes that could benefit those companies. That's why paying attention to these trades matters. It's not just about tracking their investments. It's about recognizing patterns, understanding policy influence, and getting in early. So if you want to know which stocks influenced by government policies Congress is betting big on for 2025, stick around as we break down the top 5 stocks they're buying right now and why they could be game changers. Stock 5: EQV Ventures. Acquisition Corp. Open parenthesis. EQV close parenthesis. EQV Ventures. Acquisition Corp. Open parenthesis. EQV close parenthesis is currently trading at $9.99 per share with a market capitalization of approximately $445.5 million. The stock's daily range fluctuates between $9.98 and $10.02, reflecting its stable price level, typical for SPACs that haven't yet completed an acquisition. Its 52-week range spans from $9.88 to $10.05, further indicating minimal volatility. Since SPACs generally trade near their nominal $10 per share value until a merger is announced, EQV's current price reflects market anticipation of its future target. Given that EQV has not yet selected an acquisition target, traditional financial metrics like revenue, earnings, and payout ratio are unavailable. However, if EQV successfully merges with a high-growth company in the energy sector, future returns could be substantial, particularly if the target operates in a lucrative niche, such as renewable energy or upstream oil and gas production. Congressional trading patterns in 2025 have shown a notable interest in SPACs, and Congress members' stock portfolios often include speculative investments like this. Congressman Michael McCall has recently made significant purchases of EQV, signaling confidence in the potential of this SPAC stock for long-term growth to secure a valuable target. Assuming a hypothetical annual growth rate of 8%, a $100,000 investment in EQV today could grow to approximately $215,892 after 10 years, $466,095 after 20 years, and $1,005,816 after 30 years. Without a dividend distribution at present, the projected annual dividend value remains zero for the initial 10, 20, and 30 years unless the post-merger company initiates a payout. Stock 4. Hercules Capital Inc. HTGC, Hercules Capital Inc., or HTGC, is currently trading at $20.11 per share, with a market capitalization of approximately $3.37 billion. The stock's daily range is between $20 and $20.17, while its 52-week range varies from $16.72 to $21.78, highlighting its recent upward trend. HTGC offers an attractive forward dividend yield of 9.67% with a forward annual dividend rate of $1.92 per share. The ex-dividend date is listed as November 13, 2024, and the company's beta is 1.34, indicating moderately higher volatility compared to the broader market. Hercules Capital focuses on providing venture debt financing to high-growth companies in industries such as technology, life sciences, and renewable energy. With its well-diversified portfolio, HTGC has maintained steady revenue and earnings growth, reflected in its trailing 12-month EPS of $2.04 and a PE ratio of 9.86. The company's high dividend payout ratio of around 94% demonstrates its commitment to returning value to shareholders while balancing its cash flow for portfolio expansion. Congress members' stock portfolios often include dividend-focused stocks like HTGC, and Congresswoman Virginia Foxx has recently increased her stake in HTGC, showing confidence in the company's strong dividend yield and portfolio performance. Assuming a moderate annual growth rate of 7%, a $100,000 investment in HTGC today could grow to approximately $196,715 in 10 years, $386,968 in 20 years, and $761,225 in 30 years. Given the current dividend yield of 9.67%, the annual dividend income on a $100,000 investment would be around $9,670. If the dividends grow at a compound annual growth rate, CAGR, of 4.5%, the annual dividend income could increase to approximately $14,950 after 10 years, $23,140 after 20 years, and $35,800 after 30 years. Stock 3. Dynatrace Inc. DT. Dynatrace Incorporated, DT, is currently trading at $51.33 per share, with a market capitalization of approximately $15.320 billion. The stock's daily range is between $50.85 and $51.64, while its 52-week range spans from $39.42 to $61.41, showing its solid performance over the past year. With a beta of 1.05, Dynatrace exhibits slightly higher volatility compared to the overall market. The company's price-to-earnings PE ratio is 95.06, reflecting strong investor confidence and high growth expectations despite its relatively high valuation. Dynatrace operates in the software intelligence space, providing cloud infrastructure monitoring, application performance management, and AI-driven optimization tools. Its earnings per share, EPS, stand at 54 cents, and while it does not currently pay dividends, its reinvestment strategy has fueled consistent revenue growth. Over the past 3 years, the company has maintained a compound annual growth rate, CAGR, of approximately 23%, driven by increased demand for cloud solutions and performance monitoring in enterprise IT environments. Congress members' stock portfolios often feature high-growth tech companies like Dynatrace, and Congressman Michael McCaul has recently increased his stake in Dynatrace, indicating optimism about its growth prospects and potential government contracts in cybersecurity. Assuming an annual growth rate of 10%, a $100,000 investment in Dynatrace today could grow to approximately $259,374 after 10 years, $672,750 after 20 years, and $1,746,251 after 30 years. Since Dynatrace does not distribute dividends, the projected annual dividend income remains zero throughout the 10, 20, and 30-year periods unless the company initiates a payout in the future. Stock 2. Gevo Inc. GEVO. Gevo Inc. Gevo is currently trading at $2.11 per share, with a market capitalization of approximately $505.15 million. The stock's daily range is between $2.10 and $2.26, while its 52-week range spans from 48 cents to $3.39, highlighting significant price volatility over the past year. With a beta of 2.95, Gevo exhibits high volatility compared to the broader market. The company's price-to-earnings (PE) ratio is negative due to its trailing 12-month EPS of negative 0.33, reflecting ongoing operational losses. Gevo focuses on the development and commercialization of renewable fuels and chemicals, including sustainable aviation fuel (SAF) and renewable gasoline. Despite its innovative product line, Gevo remains in a growth and investment phase, which is evident from its lack of dividends and reinvestment of capital into scaling production capabilities. Given the company's early-stage nature and high capital expenditures, it currently offers no payout ratio. Recent congressional trading patterns in 2025 show that Congressman Ro Khanna and other Congress members have increased their stakes in Gevo, indicating growing confidence in the company's future prospects, especially in light of upcoming government policies supporting renewable energy. Assuming a hypothetical annual growth rate of 8%, a $100,000 investment in Gevo could grow to approximately $215,892 after 10 years, $466,095 after 20 years, and $1,005,816 after 30 years. Since Gevo does not distribute dividends, the projected annual dividend income remains zero for the initial 10, 20, and 30 years unless the company initiates a dividend policy in the future. Stock 1: AppLovin Corp. AppLovin Corporation (APP) is currently trading at $322.70 per share, with a market capitalization of approximately $108.29 billion. The stock's daily range is between $317.57 and $328.47, while its 52-week range spans from $39.43 to $417.64, showcasing its significant price volatility and growth trajectory over the past year. The company's beta of 1.86 indicates a higher level of volatility compared to the broader market. With a price-to-earnings (PE) ratio of 98.38 and an earnings per share (EPS) of 3.28, AppLovin reflects strong growth expectations despite its relatively high valuation. AppLovin operates as a mobile technology company, providing platforms for app discovery and revenue optimization through advanced artificial intelligence and machine learning algorithms. Its robust revenue growth and market-leading technology have contributed to consistent financial performance. Over the last 3 years, AppLovin has maintained a compound annual growth rate (CAGR) of approximately 28%, driven by increasing ad budgets directed toward mobile apps and gaming platforms. Congress members' stock portfolios often include high-growth tech companies, and Congressman Josh Gottheimer has recently increased his stake in AppLovin, highlighting optimism about its future growth potential in the mobile advertising space. Assuming a hypothetical annual growth rate of 10%, a $100,000 investment in AppLovin today could grow to approximately $259,374 after 10 years, $672,750 after 20 years, and $1,746,251 after 30 years. Since AppLovin does not distribute dividends, the annual dividend income for the initial 10, 20, and 30 years would remain zero unless the company decides to implement a dividend policy in the future. So there you have it, the top 5 stocks Congress members are buying right now. Whether it's SPAC stocks for long-term growth, business development companies, or tech stocks, one thing is clear: Congress is preparing for big gains in 2025. And by tracking congressional trading patterns in 2025, you could position yourself for potential profits before the market catches on. If you found this video helpful, make sure to like, subscribe, and hit that bell icon so you don't miss future updates on congressional trades, stocks influenced by government policies, and other smart investing strategies. Thanks for watching. And here's to a profitable 2025.